Welcome back. We're getting a check of the oil market, which settled about an hour and a half ago. And WTI crude for May futures settled at $113.90 per barrel, still trading in the electronic market, up about 4% for the week. So this will be the first week in actually snapping a 2-week down streak. So also we got some news today from Baker Hughes. The oil rig count in the U.S. Shot up 7 from last week, and it now stands at 531. And speaking of skyrocketing oil and gas prices, it's an election year. What's a Biden to do? Drill, baby, drill. And the fact is, Americans need light, sweet crude now, along with its refined product for the gas tank. But that flies in the face of the administration's push for green energy. Yahoo Finance's Rick Newman is here to break it down. Rick.
Hey, Jared, something surprising happened today, which is that a lot of environmental groups and climate activists came out swinging against President Biden and this new plan that he worked out this week with some European leaders to provide more natural gas to Europe. Now, what's going on here? Europe is very dependent on Russian natural gas. They're trying to wean themselves off of that and speed it up so that they can effectively start to boycott Russian energy products and make it that much harder for Russia to wage this war in Ukraine. So Biden has said, we got a lot of gas in the United States. We export a lot, and we'll try to get you guys more gas. Now, this is not a simple thing to do, and I'll go into more detail in the story people can find on our website. But basically, Biden is now giving some support to the fossil fuel industry in the United States and basically saying we're going to help you guys out to the extent we can in terms of getting more gas over to Europe. So environmentalists don't like this. They say, no, that's not the way to go. We should be providing more clean energy or helping Europe get more clean energy. But there just isn't enough clean energy ready right now. And so what's filling the gap? It's fossil fuels, just as it has for the last 80 or 90 years.
Rick, it's Dave here. As an aside, are you rocking a Zoom mullet, which is partied on the bottom and business up top? And the real question I have is there's two dueling narratives on the oil and gas front, which is the administration continues to say there's more than 9,000 permits that the oil and gas companies are not drilling on. And the oil and gas companies day after day are saying the administration is going to war on the oil and gas industry. Which is the truth?
I think I can answer the complicated question about the permits more comfortably than I can the Zoom mullet. But I will tell you that I have worn the Zoom mullet during much of COVID. And as for what I'm doing down there on any given day, I'm keeping that to myself. As for the permits, the situation in the oil and gas industry, I've spent a lot of time interviewing people in the industry to get to the bottom of these types of questions. At the moment, they have plenty of reserves they can tap to drill more if they want to. The biggest factor that has been limiting production of oil in the United States is that energy producers lost a ton of money from 2015 through 2020 for 6 years in a row. There were tons of bankruptcies. And nobody wanted to invest in those companies anymore because it just started to seem like a terrible investment. So what they did is they pulled in capacity, and they've tried to be more disciplined, even with prices going up, because that doesn't mean prices will stay up. They've been through this cycle many times. Prices go up, drillers jump in, they provide more supply, then prices crash and they lose money. So they're trying to be more disciplined about expanding. And that's what investors are telling them to do. We want you to return money to shareholders instead of investing it in growth and losing money down the road. That's really the biggest factor that has been limiting oil supplies. However, we are seeing solid evidence now that we are going to get more oil production coming in the United States in the next months and into 2023.
And Rick, a quick question about electric vehicles. We've seen that internet searches continue to rise as we saw the gas prices go up. What do you think this is actually going to translate to in terms of investment, either for people in clean cars or for more investment in clean energy?
This has happened before. And the last time we had a gas price spike at this level was in 2008. We did not have electric vehicles yet then, but we did have hybrids. And there was a huge increase in people trying to buy hybrids such as the Toyota Prius. There really weren't many. You could not buy a Toyota Prius back then. There just weren't any around. And we're now seeing something similar with electrics. The problem with electrics, however, is they're mostly very expensive. There are not too many electric vehicles around the price point that a typical family can afford, let's say $25,000, $30,000. They're mostly luxury vehicles, $50,000, $60,000, $70,000. So I think a lot of people are getting more interested in electrics. But I don't think the cars are there for most people to buy yet. So we need more of these models coming online, and they are coming online.
Yeah, and I think I've read that it's going to be about 2025 or 2026 by the time the Model S reaches parity. The bare bones model with the Toyota Camry, have to see if that comes to be about. Yahoo Finance's Rick Newman, thanks for stopping by.